Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 5th of July 2019, so welcome everyone and welcome to this Friday's afternoon session where we're going to have a quick look at the markets, a few of the charts, a few of those that we looked at this morning just to see how they're getting along, and a few new ones as well, of course. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, just a quick mentioning of our JFD bank web page here, the YouTube channel, and you can always subscribe to it, and yep, in order not to miss any of our videos that we produce on a daily basis. So, but for now, let's quickly jump into the charts. Now, the first one I want to touch on here is the S&P 500. Now, looking at this one, of course, you can see that yesterday we were closed here on. And still the candle here is sitting from Friday, from Wednesday, but today's candle we will most likely we'll see a nice opening here to the downside. It's going to be below these all-time highs that we managed to reach here on Wednesday. So and looking at the index, the cash index right now, it seems that the opening price could be around here somewhere, just slightly around the 2,980 zone, so just slightly above this little peak here that we saw on the 1st of July, and but again, like I said, it will be below this all-time high that we've managed to reach here on Wednesday. So in a way, it's going to be very interesting to see where it goes further, because from, let's say, from the very short-term perspective, what you could keep an eye here is on this little tentative upside support line here. So in a way, if we see a drop below this upside support line, then yep, in a way we could consider a possible move, possible slide to the downside here. So that's why be very careful with this one here. It's going to be very interesting, very tricky to see where exactly this is going to go later on today, and where it will end up by the end of today. So basically, long story short, guys, specifically for today, keep your eyes on some of these key support and resistance levels. So in terms of the downside here, a drop below the 2,978 zone could potentially open the path towards these slightly lower levels, and by lower levels I mean the area here near the 2,954. Now, if of course if this fails to withhold, then yep, this could in a way turn out to be a little bit ugly for the index, and we could see this one sliding further down. So for now, all eyes are of course on this upside support line, this tentative one, of course, a little bit, but nevertheless keep an eye on it. In terms of the upside, we'll take a more conservative approach here, and wait until we see a clear push above this recent high near the 2,995-96 zone, approximately around there. So, and only then we'll consider a possible move higher. So that's why, guys, be very careful. Of course, if this upside support line holds, this tentative upside support line holds, then yeah, we could see a reversal and a push higher. But like I said, in order to kind of get more comfortable, wait for that push above this recent all-time high, or should I say the all-time high, in general, the all-time high, basically, push above the 2,995-96 zone, and then aim for higher levels. So for now, keep an eye on those levels. Very quickly on gold takes a hit, and it's now testing this upside support line taken from the low of the 30th of May. It's going to be very interesting to see where it's going to end the day. Will it actually close below this upside support line, or actually is going to stay above it. So for now, we're not going to speculate on this one too much. All eyes just, guys, are on this. Keep your eyes on this upside line. For now, you can see it is breaking to the downside. The only thing is that it does have the S3 here underneath, which is already kind of getting met here as we speak. So this S3 is around the 1393 zone. So keep your eyes on this one. If this continues to slide further down, and let's say if it closes the daily candle today below this upside support line, then, well, I mean, we could see further declines going into next week. In terms of the upside, we need to see this one traveling back above the 1412 before we could at least consider some higher levels again. So for now, we're just gonna keep it short and simple. Keep your eyes on this upside support line. Going into USDCAD now very quickly on this one. So the pair managed to push to the upside. I mean, let me actually mention that we did get some very good numbers from the US, but in terms of non-farm numbers, because the average hourly earnings and the unemployment rate have fallen a little bit. So the average hourly earnings year on year dropped by 0.1%, and the unemployment rate also dropped by 0.1%. So in a way, but of course the non-farm payroll number itself has managed not only to beat the previous number of 72K, but also managed to beat expectations at 160K. So it came out at 224. So as you can see, the initial reaction was this. You can see the dollar strengthened on all this and pushed to the upside and broke on you. Looking at this USDCAD chart here, it pushed above this 1.3080 zone. I talked about this this pair this morning, basically, and I was telling you guys, if we see a nice good push above this 1.3080 zone, then in a way it could increase the chances to push further up. Initially, of course, we did see this move, but it kind of failed to reach this our other target near the 1.3145. Now, of course, for now, we're just going to remain cautious, because in a way this could continue moving sideways here, and given that the other US data came out not really that good as expected. I mean, yes, the initial reaction of the non-farm payrolls was good, but let's see actually if the dollar can maintain its strength against other currencies here. And if it does, if it can, then yep, we will consider maybe higher levels going into next week. But the only thing is here, looking at the USD CAD one, in order to kind of consider higher levels, at least in the near term, ideally we would like to see a nice good push above the 1.3145, and this way, yep, we could target this downside resistance line. For now, if this suddenly, let's say, reverses back down and drops back below the 1.3080, now in a way this could create this kind of still negative atmosphere here for the USD CAD, and but we will consider the downside if we see a drop below the 1.3030 zone, and this way, yep, we'll target lower areas, because this way the pair would confirm a forthcoming lower low, and we could then see this one sliding further. So for now, guys, basically, long story short, keep your eyes on some of these levels. Keep your eyes on the 1.3080 zone. If it continues to hold nicely, then yep, it could increase the chances for USD CAD to travel towards the 1.3145. Because, by the way, just to let you know as well, that the data from Canada wasn't that great as well. I mean, the unemployment rate came out as expected, the same 5.5%, but the employment change has dropped. So that's why it's kind of also the USD CAD is supported to the upside here. So for now, be very careful. Let's see how this is going to play out, and let's see how this day is going to end. Also, a good positive reaction was seen here on USDCHF. It managed to travel higher. This is actually something that we've posted here today on our trading view account here, and initially we've posted this idea, this scenario, that keep an eye on this 0.9885 zone, which we can see that it got broken. So the pair traveled higher and almost managed to reach this downside resistance line. So, or maybe on your chart it has already reached, so depending on the candles here. So that's why, guys, of course initially, yes, it did have a nice break here, it pushed higher and everything seems to be looking quite positive. The only thing is that in order for us, let's say, to consider further upside moves, we need to see that nice good clear break and a close at least of a daily candle above this downside resistance line before we could consider higher levels. Again, we may see this arrow here happening, this scenario that is marked by this arrow. So initially, like I said, this is what we've drawn here and what we've posted here on TradingView. So let's see if actually something like this happens. But that will happen if this downside resistance line continues to hold. If, let's say, suddenly the pair drops back below the 0.9885 zone, now this could be a little bit of a worry signal here for the USDCHF, and we could see maybe this one sliding back down towards the 0.9838 zone. So but of course, let's not over speculate on this one too much. Let's see how this is going to play out. But for now, of course, it is somewhat quite positive. We're going to be cautiously bullish on this one, but we need to see that nice good break above this downside resistance line before aiming for higher levels. USDJPY also had a nice good reaction here. We did post USDJPY a while ago, about a few days ago, if I'm not mistaken. So yes, that happened on the on Tuesday, basically, where we also kind of were aiming for higher levels, but then it kind of broke this upside. There was a tentative upside support line, but what I was saying here in one of my videos this week, or to be more precise, yesterday's traders tea time, we needed a nice good push above the 108.13 zone before we could kind of aim for higher levels. And by higher levels, I was talking about this 200 EMA here on the 4-hour chart. We managed to reach that one perfectly. We did fail to reach the 108.53 zone, but then again, a 108.50 level, that was a perfect test, a perfect hit. So you can see that now the pair is slightly sliding back to the downside. Now let's see if it actually can maintain these gains here, and if it can actually travel further up. But what we're going to do here now is we're going to take a more cautious approach and wait until we see a push above the not only the 200 EMA but also above the 108.53 zone. This way the pair would confirm a forthcoming higher high here on the 4-hour chart, and we could see this one traveling towards the 108.80 zone. This is the one that we're going to consider first. Euro USD, now this is very interesting as well here. So as you can see, continues to slide below this upside support line. I talked about this pair this morning. Basically, I was telling you guys to keep an eye on it, because if this level here, the 1.1275, gets broken, then yep, it increases the chances for the pair to slide further down to test this upside support line. Now, that said, the day is not finished yet, so let's see how this is going to play out, because we also may see this one reversing sharply back above. And let's say if the daily candle stays above this upside support line, then of course all this move is going to be seen as a false breakout, and we may see the bulls kind of stepping in here maybe next week and pushing this one back to the upside. So of course this is just a potential scenario for now. Keep your eyes on this upside support line, and keep an eye on how this pair is going to, and where this pair is going to close today. So especially if, let's say, if it stays below the 1.1240, now this is where we will consider further declines, and we will then target areas near these lows here, near the lows of the 18th of June, around the 1.1180 zone. So basically that's putting the pair back below the 1.12 area. So again, like I said, keep your eyes on today's close, keep your eyes on the daily candle close, and let's see how this is going to play out. and then we will position ourselves for next week. GBPUSD also taking a hit, also taking a strong hit, and you can see that now the pair is testing the lows of June. So the lowest point of June here near the 1.2505 area. Let's see if it actually manages to continue pushing further down. If it does, then well, this is confirming a forthcoming lower low, and we could see this one traveling further down, especially going into next week. But that's also in addition if we see the daily candle closing below this 1.25 area. So continue observing this the price action here. Of course, looking at this one right now, it is quite oversold here on the shorter time frames, but then again, we've seen this many times, and in a way it could continue sliding further down here, especially if it, like I said, if it stays below this 1.25 zone. So keep your eyes on that one. In terms of the upside, it's difficult to talk about the upside right now because let's say if this suddenly reverses back to the upside and pushes above the 1.2560, this is where we will consider a possible move higher here. Initially we'll aim for the 1.26 zone and maybe then slightly above that, but for now it's not really looking good for GBPUSD as well. Okay guys, I hope you found it useful. Thank you very much for sticking around and watching until the end. If you want to join me on Monday morning, as always, on my Trader's Espresso, and that's 6 o'clock GMT time. But for now, I hope you have a wonderful weekend. For those who are still trading, be very careful today, and keep your eyes on the price action. And of course, once you're finished with your trading, also have a wonderful weekend. And I'll see you later, guys. Thank you very much, and bye-bye.